Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. This is a Friday morning. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. As always, I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, morning, folks. I was away for 2 days, but lots of action in the market. I mean, and all over the place with respect to the FIIs. And yesterday, some global concerns creeping back in. So, I mean, it's not a dull Friday, shall I say?
Well, that's right. The Friday evening will be more interesting, I guess. But for the markets, I think we are in a bit of a consolidating range.
Yeah.
Yesterday, we pulled back because of expiry. But plenty of cues, Prashant, and the US markets will have a longer weekend as well. So that's another point.
Monday's a holiday, so
Yes, for them.
We will, of course, be trading into that. But directionless, I mean, largely directionless in terms of US session, if you look at equities. But I mean, equities really is not the story. It's not been the story for the last 3-4 days out of the US, as we've explained, of, every day now. So let's just get to the story then, right? I mean, so the S&P was flat, the Nasdaq was up about 0.25% or so, nothing very much at all. But essentially, bond yields did a complete round trip. So, we had one more big spike as far as US bond yields are concerned across the curve, 5, 10, 30. Not at the very near term. This is all happening at the longer end of the yield curve, like what we saw in Japan as well. It's not the shorter end. So the 30-year, for example, hit 5.14 intraday. And then it pulled back 10 basis points from the highs. So it was pretty significant, and we ended actually slightly lower on the 10-year on a day-on-day basis, the 30-year, that is. The 10-year was down 7 basis points, so we left off at about 4.52 after hitting the near 4.6% kind of level, same time when we were sort of talking about this yesterday. So a bit of a round trip across the yield curve is what we've seen. Dollar index struggled to be above 100, so ended just under it as well. So is it profit booking? Is it dip buying? A little bit of short covering as far as US Treasury futures are concerned? Possibly yes, and that ahead of the long weekend in the US. Otherwise, there was no real big reason for this kind of. I mean, there's no news trigger per se, which kind of caused this big round trip. Yields shooting up and then sort of closing slightly lower on a day-on-day basis. US markets are shut for a Memorial Day holiday. So that's the other thing. Now, House Republicans have managed to pass narrowly, but passed the revised tax bill, the Trump tax bill, the one big beautiful bill, as Trump has called it, and send it to the Senate. Now, the Senate has got 18 days to pass it. The aim of the Trump leadership, the Trump team, has been to sort of get this out of the way by the 4th of July. That's the goal date for the Trump team to pass the bill. I mean, it may happen, may not happen, but the fact that the House has cleared it already ahead of deadline. The deadline was for this to happen was Monday, but since it's already happened, maybe we'll have to see what shape, form, what additions, changes the Senate makes before this actually is this is done. We put this out on Monday as well in terms of some estimates which suggest that Trump's tax sort of bill is going to add the spending bill, whatever you want to call it. This bill is going to add over a period of time some $3.5 trillion in deficit by 2034. So that is the focus, and there is a fair bit of criticism as well. I mean, tax cuts now, spending cuts later. So what happens is whatever cuts you make, and it's not just in the US but everywhere, whatever cuts you make, whatever changes you make, that more or less tends to start to become a little permanent. So we'll see. But this, of course, along with the downgrade that we saw, the rating downgrade that we saw last Friday, have been the two drivers as far as yields are concerned in the US. These are not the reasons why bond markets have behaved, but I think this is the symptom, especially the rating downgrade, pointing to the fact that there is more spending coming, irrespective of what Trump or others have said they want to do to contract the size of the government. The other one, of course, was US PMI numbers, which surprised to the upside for the month of May. And this kind of points to what lots of Fed officials have said, that how do you read this data? Because there is there are tariffs imposed, then there is a stop, then there is a start. So it's very, very tough. And it's only going to be sometime in fall of 2025 when data starts to mean something for them to be able to use it as a signaling device. Next week is going to be important because, again, from the bond market perspective, US Treasury has announced auctions, 183 billion total auctions, and these are sort of different durations. So there is one on Tuesday, one on Wednesday, one on Thursday. Is there going to be demand and strong demand? Is it going to be weak? What will happen? I think these are questions which are important for bond markets and what happens to yields. So next week, in that sense, remains important. By the way, some are talking about whether it's already time that the Fed is going to step in. It's very unlikely. I mean, or whether the Treasury does something, the government does something, cut the size of the auction itself to match supply and demand. It's happened in the past, back in 2016. But again, I mean, I think these are all things we'll have to wait and watch for. But this is the big driver, at least from a US perspective. Here in India, just to tie in the levels, I mean, yesterday we managed to close, we broke the 20-day moving average intraday, but we managed to close above it. The number now, as of yesterday's close, stands at 24,525. So that remains the first level. On the downside of the market starts to drift again. Downside level, which should hold, is 24,462, which is yesterday's low. We should not break above it. And then, of course, below that, there is a 20-day moving average. On the upside, of course, it's the high of 25,116. But I think, in the near term, just be focused on some of these levels on the downside rather than, hurrying and worrying about how quickly we're going to be able to take the upside levels out. Nifty Bank broke the 20-day moving average, but managed to close above it. That is, again, it's not very clear. It's a little confusing out there. So I think a day, 2 days more of action. The expiry yesterday is out of the way, maybe a cleaner picture now. On the way down, the swing low for the Nifty Bank is 54,690, which needs to hold. And below that, you've got 54,031, which are important levels to watch out for. GIFT Nifty will give you a quick sense of how we are likely to start, and we'll pick it up from there. 40 points higher on the GIFT Nifty. Surabhi.
Absolutely, Prashant. And this is because Asian equities are actually holding up fairly okay. Yeah. But this bond story is the really big one. And not just the US, even Japanese long-dated bonds, they've been rising. German bond yields, they've been rising. So globally, I mean, it started with the US, but it seems investors are a little disenchanted, a little uncomfortable with their bond holdings right now. There's a lot of shift going on in the money markets because of this. And this is actually weighing on sentiment overall. We've seen that the US market has been down 3 days. Now the futures are a little positive, and that's why Asian markets have also picked up. But 3 days of decline coming in. And the US indices, by the way, so far this week are already down 1.5 to 2%. Now let's see if they snap that trend today. The 30-year bond touching that level of 5.14, almost 5.15, that became a huge talking point. And the yields then cooled off from there. But the fact is that they remain very elevated. And like I said, not just US, but investors are watching what's happening in Japan and in markets like Germany as well. The crypto market rallied because there seems to be a lot of debate about whether you want to shift your holdings now. It should not be all in US treasuries or Japanese bonds. Crypto is seeing a big move. In fact, the Bitcoin is virtually at this new level of 112,000. It touched 111,999. And it's not just Bitcoin, but all the asset classes, Ether, etc. All of these cryptocurrencies were up between 3% to 7%. This was overnight. Asian markets today, like I said, they've managed, at least for now, equity markets have managed to shrug off a lot of this concern. And there's some green on the screen, not just in Japan, in Hong Kong, in Singapore. Most of the regional markets are actually up and about. Even the Japanese market, the Nikkei, is actually up. There's inflation data out of Japan, which is pointing to upward pressure. Core inflation in Japan is at a 2-year high, 3.5%. The headline inflation number is as expected at 3.6%. But the rise in core is what the Japanese markets are tracking. Otherwise, headline inflation is rising because rice prices have been very, very high in Japan. So let's watch for this. Now let's come back to our market. So what have we done this week? It's been consolidation, but with a negative bias. The Nifty is down about 1.6%. Mid caps have fallen a little less, 1.3%. The micro cap and the small cap market relatively unscathed. The cut there is only 0.3% on the small cap index. Now the issue is with flows. Flows are very patchy. Let's talk about yesterday's number. Yesterday, again, we had a big sell number, 5,000 crores on the downside, domestic institutions buying. But look at the trend. The preliminary data for this week. We started Monday with a small sell figure of about 500 odd crores. Tuesday was a gigantic sell figure of 10,000 crores. Wednesday, they turned net buyers. And finally, again, Thursday is a negative number of about 5,000 crores. The overall cumulative, those are the bars that I'm talking about. Now, that's the provisional data for this week so far. It's all over the place. Overall, cumulative, the month of May has still been very positive for FPI flows because we've got net inflows about 19,000 crores, but that includes your block trades, etc. This is the trend that is a little, iffy at this point in time. So let's watch for this. Lots of stocks in focus as we get into the fag end of earnings season. ITC. Some people will say it's disappointing, especially the FMCG business. Cigarette volume growth is okay, but there's pressure on margins. Sun Pharma, the US business, as well as the global specialty business, that has missed expectations on the revenue front, but margins have done well for Sun. So let's watch for this. Honasa, 200 basis points decline in margin year on year. That's a reality. Top line is growing, but are they getting the house in order or not? So let's watch for some of these numbers. By the way, there are some sensex changes as well, just to quickly put this on your radar. Nestle and IndusInd Bank are going out. Trent and BEL are coming into the sensex, and this is all effective June 23rd. So we'll watch for all these stocks because of the passive inflow-outflow that might happen. And last but not the least, we're talking about global bonds and what's happening in global money markets. Well, it's an important day for us here as well because the RBI board will today decide what kind of dividend it wants to give to the central government. The estimates are as high as 3 lakh crore to 3.5 lakh crores. That's how much the RBI could give the central government this time around versus about 2.1 lakh crores last year. So let's watch for this. Lots of action to keep us busy. Nigel.
Well, yesterday was a weekly expiry that played out. It was very, very exciting and a perfect expiry that did play out because the bears, they thought that they had all the cards with them. And towards the end of trade, the bulls, well, they fought back. So you just take a look at it. At around 3 p.m. odd, things did turn around. So a classic expiry is what played out. As you mentioned, yes, the global Q is a little bit of a tizzy because we are seeing that movement on bond yields as well globally. And that's what's making, the bulls a little bit nervous. But the good point is the India VIX continues to cool off. We're not seeing any big spike out there. Yesterday as well, we ended low, but the VIX continues to remain at around that 17, 18 odd mark, which is very, very manageable. Remember, earlier in the series, we went to around 22, 23 or thereabouts, and we've cooled off from there. What did the FIs do? Well, they sold in the cash market and they added shorts in the futures market. So on index futures, they added close to around 10,000 contracts. They unbound some longs as well. They remain net short with close to around 68% of their positions on the short side. And for this week on the whole, the FIs, they have been adding shorts and the clients, they have been adding longs. So that's going according to the script. The look on the screen that should come up for you. The FIs being net short, you want some shorts in the system. The markets were devoid of any kind of shorts. And that's what they have done. So if you just take a look at it from around 23,000 contracts, it's gone to around 55,000 contracts. And the client positioning as well, they are building on longs. This is actually a favorable scenario when you have the clients going long and the FIs moving short. Keep in mind the RSI on both the Nifty as well as in the Nifty Bank, they have cooled off. They're spurted away to around 70 odd the last time I checked. In fact, it was below that 60 odd mark. Options data, extremely crucial out here. One could say there could be a strategy that's playing out at around the 24,600 call and the 24,600 put. So you write both of them, you pocket close to around 400 rupees or thereabouts, and then you're playing for a broad range on the downside 24,200 to around 25,000 odd. But just going by the screen, it's telling you that the call writers, they feel that they can defend the higher levels of around the 25,000 odd mark. So the crucial resistance mark going by the options data is around 24,850 and around the 25,000 odd mark. On the downside, the options data suggests this 24,420, that will become a bit of a support zone. And yesterday's low, you don't want that to get breached. So this is the crucial support zone that you're talking about. But in the last 6 trading sessions, the Nifty has consistently been making lower highs. Just take a look at that screen. That's telling you lower highs is what we have seen. So for today's session, I'll want the Nifty to get past this, to give the bull some kind of confidence. We continue to remain in a range, but you'll want to see the high of today breach this level. So that will break that 6-session trend that we've seen of making lower highs. The Nifty Bank, that as well did pull back to around 54,500, which is the level that we called out for yesterday. And that's a good recovery. So you wanted to continue to defend this 20 DMA or thereabouts. Don't want it to break down. So I think we're in a bit of a range, but the 24,400 odd mark, crucial support zone.
All right, Nigel, thanks very much for that. So that's the picture as far as the setup is concerned.